the pattern that destroyed every empire extended script. Look, I need you to hear something that's going to sound extreme, but before you dismiss it, before you click away, just give me 5 minutes. Because what I'm about to show you is an opinion, it's mathematics, it's history, and it's happening right now, whether you believe it or not. $847 billion. That's how much US Treasury debt China has sold in the last 18 months. Not speculation, not rumor. Official Treasury Department data that you can verify yourself right this second. And here's the part that should make your stomach drop. Japan, America's closest ally, the country that's been buying us debt for 40 straight years like clockwork, just did the exact same thing. $264 billion sold since January 2022. Saudi Arabia, Belgium, reducing holdings by 43%, Switzerland, dumping treasuries month after month, France, quietly exiting, the six largest foreign holders of US debt are all selling simultaneously. And when I say simultaneously, I mean at the same time, in coordinated fashion, like passengers quietly putting on life jackets before anyone announces the ship is sinking. This isn't politics. This isn't some conspiracy theory. This is a pattern, a mathematical pattern that I've studied for 5 decades. The same pattern that Ray Dalio has been warning about for years. The same pattern that destroyed the Spanish Empire in 1557. The same pattern that collapsed the Dutch Republic in 1795. The same pattern that ended British financial dominance in 1976. Spain, the Netherlands, Britain, 3 global superpowers, 3 reserve currencies, all followed the exact same 4-stage cycle from absolute dominance to complete collapse. Same warning sign, same timeline, same devastating outcome every single time. And America just entered stage 3. The exodus stage, the capital flight stage where the smart money leaves before everyone else realizes the party's over. Now, stage 3 doesn't last forever. Historically, it runs 18 to 36 months from start to finish. We're approximately 18 months in right now. That means you probably have maybe 12 to 18 months left. 12 to 18 months to reposition your retirement accounts, your savings, your family's financial future before stage 4 hits. And stage 4, well, that's when everything collapses, not slowly, not gradually, catastrophically. I predicted the 2008 financial crisis when everyone, and I mean everyone, said housing prices could never fall. I've studied every major debt cycle in the last 500 years. Not just read about them, studied them, analyzed them, found the patterns that repeat across centuries. By the end of this video, you're going to understand exactly what's happening. You'll see the pattern with your own eyes. You'll know the timeline. You'll understand why the smart money is already moving. Let me show you how this works. Here's what nobody's telling you about reserve currency collapse. It's not random. It's not unpredictable. It's mathematical. There are 4 stages that repeat every 75 to 100 years throughout history with stunning precision. Stage 1 is ascension. A nation becomes the center of global finance. Capital floods in from everywhere. Their currency becomes the standard for international trade. Banks expand rapidly. Markets boom. Innovation accelerates. The future looks limitless, permanent, unstoppable. Everyone wants in. Everyone believes it will last forever. This stage typically lasts 50 to 80 years. Then comes stage 2, overextension. And this is where it gets interesting, because success breeds arrogance. The government starts spending beyond its means. Military expansion. Foreign wars on multiple fronts. Massive domestic programs, all funded with borrowed money. Mountains of borrowed money. The debt grows faster than the economy can possibly support. But nobody worries because asset prices keep rising. Real estate booms. Stock markets hit record after record. Central banks print money to keep the party going. This stage lasts 20 to 40 years. Stage 3 is the silent exodus, and this is critical. This is where we are right now. The smart money sees what's coming, not the public, not the politicians giving speeches about how strong everything is, but the people who actually read balance sheets. The people who understand mathematics. Major institutions start quietly rotating capital out. No announcements, no press releases, no headlines saying, We're leaving. Just systematic, calculated movement week after week, month after month. Foreign central banks reduce their holdings steadily. Sovereign wealth funds diversify away from concentrated exposure. Wealthy families, the ones with family offices and advisors who've seen this before, they transfer assets internationally. The exodus begins slowly at first. This stage lasts 18 to 36 months. Remember that number. 18 to 36 months. Stage 4 is collapse. The currency loses reserve status. Foreign central banks dump their remaining holdings all at once. Interest rates spike because nobody wants to lend anymore. Inflation explodes as all those dollars sitting in foreign banks come flooding back home. Asset prices crash simultaneously across every category. Banks fail. Pensions evaporate. The middle class, the people who did everything right, who saved, who invested conservatively, they get absolutely destroyed. Political chaos follows, social unrest. Most people never see stage 3 happening because it's quiet. It's technical. It's boring balance sheet adjustments that don't make headlines. It doesn't trend on social media. There's no dramatic moment. By the time mainstream media finally covers it, by the time your neighbor mentions it, by the time politicians acknowledge it, you're already in stage 4. And stage 4 is catastrophic. Now, if you're thinking, that's interesting history, but it can't happen to America, let me prove this pattern is real with 3 historical examples, 3 global superpowers, 3 reserve currencies, same exact cycle, same exact outcome. 1500s, Spain, the most powerful empire on earth. Not contested, not debatable, absolute dominance. Spanish galleons returned from the Americas loaded with more gold and silver than had ever been seen in human history. The treasure fleets of the Indies were legendary. Legendary. One fleet in 1545 carried 16,000 kilograms of gold and 200,000 kilograms of silver in a single voyage. That's $980 million in today's money from one fleet. One fleet, and the fleets came every single year. The Spanish real became the global reserve currency. If you wanted to trade internationally anywhere in the world, you needed Spanish reals. Madrid was the financial center of Earth, the place where everything happened. Stage 1 complete. Then came King Philip II, brilliant administrator. Devout Catholic, terrible with money. Philip fought wars with everyone simultaneously. France, England, the Ottoman Empire, the Dutch rebels. Spanish armies were stationed across 3 continents at the same time. By 1550, Spanish government spending was running at 300% of tax revenue. 3 times what they collected. 3 times. The difference? Borrowed from Italian banks, German merchant houses, Dutch financiers, anyone who would lend. And people did lend because gold kept flowing from the New World. Asset prices in Spain kept rising. Everyone felt wealthy. The Spanish economy looked unstoppable. Stage 2 complete. Then in 1555, something changed, quietly. The major Spanish banking families started moving assets to Genoa, not all at once, gradually. The Fugger family of Augsburg, Spain's biggest creditors, started demanding repayment in gold instead of promissory notes. They wanted physical metal. They wanted out. Wealthy Spanish merchants began transferring operations to Amsterdam, not shutting down in Spain entirely, just gradually shifting. Opening offices in the Netherlands, moving inventory north, redirecting trade routes, repositioning. Why? Because the smart money could read financial statements. And those statements revealed that Spain was functionally bankrupt. The Spanish government was paying 40% annual interest on some loans. 40%. Think about that. That's not the interest rate of a strong government. That's desperation. That's a country circling the drain. But the public didn't know. The politicians denied everything. The financial system pretended everything was fine. Meanwhile, the smart money quietly left. Stage 3 complete. On June 1st, 1557, King Philip II went on television. Well, he made a public announcement and told the Spanish people that the royal treasury was exhausted. Spain couldn't pay its debts. Spain defaulted. Credit markets froze instantly. Spanish government bonds became worthless overnight. Banks that had lent to Spain faced complete ruin. The king seized private gold shipments to pay soldiers who were threatening mutiny. Philip promised it was temporary. Everything would be fine, just a temporary measure. All. It wasn't temporary. Spain defaulted again in 1560, again in 1575, again in 1596, again in 1597. Four complete sovereign defaults in 40 years. By 1600, the Spanish real was worth one-third of its former value. Inflation destroyed the Spanish middle class. A loaf of bread that cost 2 reals in 1550 cost 15 reals by 1600. Savings accumulated over a lifetime became worthless. Spanish power evaporated. By 1640, Spain was a second-tier power. The empire fragmented. Economic stagnation became permanent. Stage 4 complete. Where did all that capital go? North, to the Dutch Republic, to Amsterdam, 1600s Amsterdam, the richest city in the world. The Dutch East India Company was worth $8.28 trillion in today's money. Let me put that in perspective. Apple, Microsoft, Amazon, Google, and Tesla combined are worth about $9 trillion today. One Dutch company in 1637 was almost as valuable as the 5 biggest tech giants in 2026 combined. One company, Dutch banks finance trade across the entire globe. The Amsterdam Stock Exchange, founded in 1602, was the first in history. They invented this. The guilder became the global reserve currency. Capital flowed into Amsterdam from everywhere. Amsterdam in the 1600s was like Silicon Valley, Wall Street, and London combined into 1 square mile, the place where everything happened. Stage 1 complete. Then came the wars, always the wars. 3 Anglo-Dutch wars between 1652 and 1674, wars with France under Louis XIV, colonial conflicts with Spain and Portugal. The Dutch military presence stretched from Indonesia to Brazil to South Africa. All of it cost enormous amounts of money. Dutch government debt increased from 4 million guilders in 1650 to 80 million by 1690. A 20-fold increase in 40 years. To pay for it, they printed money. The Bank of Amsterdam, founded in 1609 as the most respected financial institution in Europe, started issuing more receipts than it had gold. Fractional reserve banking before it even had a name. Meanwhile, tulip mania hit. In 1636 and 1637, tulip bulbs were selling for more than houses. A single Semper Augustus bulb sold for 6,000 guilders. That was 10 times the annual income of a skilled craftsman for a flower bulb. Asset prices completely detached from economic reality, but everyone was getting rich on paper. Stage 2 complete. But something was wrong. The Bank of Amsterdam was running a secret. They'd been lending out depositor money to fund government wars. For every 100 guilders deposited, they only kept 25 in the vault, lent to the government. It worked as long as depositors didn't ask for their money back all at once. It was a Ponzi scheme dressed in legitimacy and respectability. By 1690, the smart money started to see the cracks. Major banking families, the Portuguese Sephardic Jews who'd helped make Amsterdam wealthy, began transferring operations to London. German financiers pulled capital out gradually. English merchants opened offices in Britain. This wasn't panic. This was quiet, systematic withdrawal. The insiders knew the Bank of Amsterdam was functionally insolvent. Stage 3 underway. For decades, the secret held. New deposits covered old withdrawals. The government kept borrowing. The bank kept lending. Everyone pretended. But in 1772, a major depositor demanded full withdrawal. The bank didn't have it. They stalled. Word spread. Within weeks, other depositors started demanding their money. The bank couldn't pay everyone. The secret was exposed. The Bank of Amsterdam had been insolvent for over 100 years. A century of fraud held together by reputation and lies. In 1795, French revolutionary armies invaded. The Dutch Republic fell. The guilder collapsed. Depositors lost everything. Riots erupted in Amsterdam streets. The government fell into chaos. The Dutch Golden Age, 200 years of dominance, ended. Stage 4 complete. Where did the capital go? London. Britain was next. The sun never sets on the British flag. You know that line. At its peak in 1920, Britain controlled 23% of the world's population, 458 million people under British rule, a quarter of Earth's entire landmass. The pound sterling was the global reserve currency for over 200 years, longer than any currency in modern history. The City of London was the center of global finance. Need capital for a railroad in America? Go to London? Need financing for mines in South Africa? Go to London. British banks financed infrastructure on every continent. Over 60% of international trade settled in pounds. British power seemed infinite, permanent, unstoppable. Stage 1 complete. Then came the 20th century and two world wars. World War I cost Britain £44 billion. That's over 600 billion in today's money. They borrowed from America, from their own citizens, from anyone who would lend. British government debt went from 30% of GDP in 1914 to 130% by 1920. Remember that number, 130%, the same level America is at today. They tried to return to the gold standard in 1925. Winston Churchill, as Chancellor of the Exchequer, wanted to restore the pound to its pre-war value, restore British glory. It was a disaster. British exports became too expensive. Unemployment soared. The economy stagnated. They abandoned gold in 1931. Returned briefly. Abandoned again in 1933. The system was breaking. Then World War II made everything worse. More debt, more printing, more promises they couldn't possibly keep. Britain ended the war technically victorious but financially destroyed. Broke. Dependent on American loans just to survive. Stage 2 complete. In 1949, the quiet exodus began. Nobody noticed at first because it was subtle. Major British corporations started shifting operations. Unilever, which had been headquartered in London since 1872, restructured with dual headquarters. Shell, Imperial Chemical Industries. They weren't leaving Britain entirely, just gradually shifting investment, building new facilities in America instead of Britain. Wealthy British families started transferring assets overseas, to Switzerland, to America, to Canada, anywhere that wasn't overtaxed, overregulated, declining Britain. The brain drain accelerated. British scientists moved to America. Engineers moved to where aerospace was booming. Entrepreneurs moved to where opportunity existed. Britain offered high taxes and declining prospects. What if America offered growth and possibility? By 1960, foreign direct investment in Britain had fallen 62% from pre-war levels. The money was leaving, the talent was leaving, the future was leaving. Stage 3 complete. On November 18, 1967. Prime Minister Harold Wilson went on television and told the British people the pound had been devalued 14.3% overnight. One day you go to sleep, wake up. The government had no choice. They'd spent years burning through foreign currency reserves, trying to defend the exchange rate. The game was over. Then in 1976, the unthinkable happened. Britain went to the International Monetary Fund for a bailout, the former global superpower. The empire on which the sun never set had to beg the IMF for emergency loans like a developing nation. The humiliation was complete. The pound lost its reserve currency status permanently. International trade shifted to dollars. Britain's century of financial dominance ended forever. Stage 4 verified. You see the pattern now? Spain, Dutch Republic, Britain. Three empires spanning 500 years, same four stages, same warning signs, same outcome every single time. And every single time, the smart money left quietly before everyone else realized the ship was sinking. Now let me show you why America is in stage 3 right now. And if you're still with me, if this is making sense, stick around because what comes next is going to explain exactly what you need to do about it. July 1944. Representatives from 44 nations gathered to rebuild the global financial system after World War II. The decision was unanimous. The US dollar would become the world's reserve currency, backed by gold at $35 per ounce. Why dollars? Because America emerged from World War II as the only major economy still intact. Europe was in ruins. Asia was devastated. America had 50% of global manufacturing capacity. Capital flooded into America from everywhere. US stock markets became the deepest, most liquid on earth. Everyone wanted American assets. The American Golden Age began, 1945 to 1971. 26 years of absolute dominance. Stage 1 complete. Then on August 15, 1971, President Richard Nixon appeared on television and announced the United States was ending gold convertibility. No more $35 per ounce. No more gold backing. The dollar became pure fiat currency, backed by nothing except faith and trust in the U.S. government. And when all limits are removed, spending explodes. 1980, U.S. national debt was $900 billion. 1990, $3 trillion. 2005, $6 trillion. 2008, $10 trillion. 2020, $27 trillion. January 2025, $36.1 trillion. December 2025, $38.4 trillion. A 4,200% increase in 45 years. The debt more than doubled in just the last 5 years alone, but that's only government debt. Corporate debt, $13.5 trillion. Household debt, $18 trillion. Student loans, $1.77 trillion. Credit card debt, $1.1 trillion. Auto loans, $1.6 trillion. Total U.S. debt exceeds $100 trillion. That's 370% of GDP. For context, Spain defaulted at 200% debt to GDP. The Dutch Republic collapsed at 250%. Britain lost reserve status at 130%. America's at 370% and climbing. Now, to pay the interest on all this debt, the government spends over $1 trillion per year. $1 trillion just on interest payments. Not paying down the debt, just interest. That's more than defense spending, more than Medicare, more than most entire government agencies combined. $1 trillion per year forever. And where does that money come from? They print it. The M2 money supply increased from $15.5 trillion in February 2020 to $21 trillion by April 2022. A 40% increase in 26 months. The largest monetary expansion in American history by far. And what does that create? Inflation, asset bubbles, wealth inequality. The stock market hits all-time highs while real wages stagnate. Housing prices have increased 73% since 2019. Price-to-earnings ratios are at levels only seen twice before in history, 1929 and 1999. Both times ended in crashes. Every asset class is simultaneously overvalued. The Federal Reserve's balance sheet grew from $800 billion in 2008 to $9 trillion in 2022. They bought treasuries, mortgage-backed securities, corporate bonds, artificially propping up asset prices. Stage 2 complete and mathematically verified. Now here's where it gets interesting. Stage 3. The exodus. In 2013, China held over $1.3 trillion in U.S. Treasury securities. Today, $760 billion. The selling has accelerated dramatically in the last 18 months. $847 billion sold since July 2024. Japan, the largest foreign holder of U.S. debt, held $1.32 trillion in 2022. Today, $1.356 trillion. Wait, that doesn't sound like selling, but they've sold $264 billion in just 3 years from their peak holdings. Saudi Arabia has reduced holdings by 38%. Belgium, which holds treasuries for other European entities, has reduced by 43%. Switzerland is selling. France is reducing exposure. The Cayman Islands, which represents hedge funds and financial institutions, is selling. Even the Federal Reserve itself is reducing its balance sheet through what they call quantitative tightening, letting bonds mature without reinvesting, draining liquidity from the system. So here's the trillion-dollar question. If China is selling, Japan is selling, Saudi Arabia is selling, Europe is selling, and the Fed is selling, who's buying us treasury debt? The answer should terrify you, mostly the US government itself. Government pension funds buying treasuries, the Federal Reserve buying during crises, circular financing. That's not strength, that's desperation. But it's not just governments. Look at what major financial institutions are doing. BlackRock, the world's largest asset manager with $10 trillion under management, has restructured portfolios over the last 2 years, reduced US Treasury exposure, increased positions in emerging markets, European infrastructure, Asian real estate, gold and commodity exposure. They're diversifying away from concentrated dollar exposure. J.P. Morgan revised allocation recommendations in 2024. Goldman Sachs reduced US equity overweight recommendations. Morgan Stanley increased international allocation guidance. These aren't random moves. These are the largest financial institutions in the world, systematically reducing dollar exposure. The smart money is moving. Stage 3 verified. We're approximately 18 months into an 18 to 36 month window. That means you have maybe 12 to 18 months left, maybe less. So what happens next? Stage 4. The dollar gradually loses reserve currency status. This won't happen overnight. There won't be a single dramatic announcement where the world says, "We're done with dollars." It happens gradually. Then suddenly, countries start settling trade in other currencies. China and Brazil are already trading in yuan. India and Russia settling in rupees. The BRICS nations, Brazil, Russia, India, China, South Africa, they're developing alternative payment systems. Over 40% of global GDP is now in countries building infrastructure to bypass the dollar. In June 2024, there were widespread reports that the petrodollar agreement ended. Let me be clear about this. The 1974 US-Saudi Joint Commission on Economic Cooperation expired. There was never a formal written requirement for Saudi Arabia to price oil exclusively in dollars. It was an informal arrangement, a handshake deal backed by American military protection. But Saudi Arabia has now publicly indicated willingness to accept other currencies for oil. They're exploring yuan-denominated transactions. The practical effect is the same. The dollar's exclusive grip on oil markets is loosening. Now, when dollar demand drops, what happens to all those dollars sitting in foreign central banks? They come home. Trillions of dollars flooding back into the US economy all at once. That's when inflation goes vertical. Not 8%, not 10%, 20, 30, 50%, maybe more. The Fed will face an impossible choice. Option 1, raise interest rates dramatically to crush inflation. But that makes the $38 trillion debt completely unpayable. Interest payments alone would consume the entire federal budget. The government would have to default. Option 2, keep printing money to service the debt, but that destroys the currency through hyperinflation. Either path leads to the same destination. Asset prices collapse because liquidity disappears. Stocks crash. Bonds become worthless. Real estate can't find buyers at any price. Banks fail. Pension funds go insolvent. Insurance companies collapse. The cascade begins, and the middle class, holding most of their wealth in dollars and dollar-denominated assets, gets completely wiped out. Savings evaporate. Retirement accounts vanish. Home equity disappears. This isn't speculation. This is the pattern. And it has happened every single time throughout history. Spain had the most powerful military in the 1500s. It didn't stop economic collapse. The Dutch had the most advanced financial technology in the 1600s. They invented modern capitalism, stock markets, central banking. It didn't stop collapse. Britain had the largest empire in history, the Industrial Revolution. A global navy didn't stop collapse. Military power doesn't prevent economic mathematics. Technology doesn't stop currency debasement. Innovation doesn't overcome fiscal insanity. American exceptionalism is just a story empires tell themselves before they fall. Every empire thinks it's different. Every reserve currency believes it's permanent. They are always wrong. So what does this mean for you? What do you actually do with this information? First, diversify out of pure dollar exposure. Physical gold and silver, not paper gold. Not Fs that you don't actually control. Physical metal that you own and hold. Gold has held purchasing power for 5,000 years across every civilization, every empire, every currency. Aim for 10 to 15% of your liquid net worth in precious metals. Second, geographic diversification. If major institutions are moving capital internationally, consider following their lead. Some stable foreign currencies, Swiss francs, Singapore dollars, Norwegian kroner. Spread your political risk across multiple jurisdictions. Third, understand the timeline. Stage 3 lasts 18 to 36 months historically. We're probably 18 months in right now. You have limited time, not years, months. Act accordingly. Fourth, increase liquidity. Keep accessible cash. Yes, cash loses value to inflation slowly, but in a crisis, liquidity gives you options. Options to buy crashed assets when they appear. Options to move quickly. Aim for 3 to 6 months of expenses in cash equivalents. Fifth, reduce debt. High debt in a rising rate environment is financial suicide. If you're leveraged to leverage, every percentage point interest rates rise makes your debt more expensive to service. Pay down credit cards, pay down variable rate loans. Free yourself. Sixth, invest in skills. The one asset that survives every collapse is human capital. Skills that create value, knowledge that solves problems, relationships built on trust. These can't be inflated away, can't be confiscated by governments, can't be devalued by central banks. Seventh, stay informed. If this video changed how you're thinking about money, if you want to see exactly which sectors historically outperformed during stage 4, if you want to know which assets preserved wealth through hyperinflation and which ones completely destroyed it, there's more coming. What happened to real estate during Spain's collapse? What happened to stocks during Britain's currency crisis? What happened to commodities, to gold, to agricultural land throughout every major currency devaluation? Those answers exist. China sold $847 billion for a reason. Japan sold $264 billion for a reason. BlackRock is diversifying for a reason. They see the same pattern you just learned. The same pattern that destroyed Spain, that destroyed the Dutch Republic, that destroyed Britain. We're in stage 3, the capital flight phase, the silent exodus. The smart money is leaving while everyone else is still partying. Stage 4 is coming. The mathematics are inevitable. The timeline is clear. The only question is whether you'll be positioned correctly when it hits, or whether you'll be asking, like millions throughout history, how did I not see it coming when all the signs were there? The information is here. The data is verifiable. You can check every number I've given you. The choice is yours. What stage do you think America is really in? What are you doing to prepare? Because the people who survive these transitions aren't always the ones with the most money. They're the ones with the best information and the courage to act on it before everyone else figures it out. The pattern is clear. The timeline is shrinking. The question is, what are you going to do about it?